call. Now, for more on Apple, let's find out even more about what happened to those iPad sales. We're joined via telephone from Brian Marshall of Gleacher Co. He's ranked among the most accurate analysts on Apple, and he's still got a buy rating on the shares. Brian, good to have you with us on Bloomberg.
Thanks, Tim.
So did you not buy enough Apple iPads? Was that the problem? You didn't load up on them at the store? Why was there that sort of disconnect between what Wall Street analysts were looking for in terms of iPad sales and what Apple actually managed to sell in the quarter?
Sure. That's a good question, Pimm, and that's what we're all trying to figure out this evening. You know, clearly iPads were disappointing, relative to expectations. I was low on the street at 3.8 million.
So they even beat that, right? Because they came in with more than 4 million.
Correct, but I think expectations were around 5 million units. So, I think, irrespective of the iPad weakness, I mean, if we look at Apple's print holistically, I thought it was very solid, both from a top-line and bottom-line perspective. So I think the down 5% knee-jerk reaction on the iPad weakness and less than expected upside on the margins is a buying opportunity.
Brian Marshall, look forward to Wednesday. We're going to get the release of a new updated operating system from Apple. Why do we need to pay attention to that?
Well, I think Wednesday's not going to be that big a deal. I think what we'll see is an updated MacBook Air, and as you mentioned, Pimm, some new operating system updates, OS 10, version 10.7, actually. So, I think we'll see some good notebooks there. But at the end of the day, I think this company's really evolves around the iPhone and the iPad, and I think that's going to drive about 70% of the company's gross margins in calendar year 2011. So I think that's the key.
Brian, what about an actual price target for Apple shares? They're trading at $299. What do you think they can be worth in 12 months?
Sure. I'd be pretty aggressive here below $300. I've got a 12-month price target of $345, which represents a pretty good upside in the aftermarket, relative to the aftermarket. So, I think we will see Apple later this year become the largest company in terms of market cap in the S&P 500. So I do think the next stop is $345, Tim. All
right. And Brian Marshall, last point having to do with international sales. They now account for 57% of Apple's revenue. Is that another reason to consider Apple as an investment? You're betting on growth outside the U.S.?
Yeah, clearly, their growth abroad for Apple is really starting to hit stride here. As you mentioned, it represents almost 60% of the company's total sales, and it's growing faster than its U.S. portion. So I think that's still a large untapped market for them. Clearly, they mentioned that, over half of their new stores next year, they expect to open 40 to 50 new stores. They currently have about 320. Over half of them are going to be targeted international stores. So I think that's a big opportunity.
Brian Marshall from Gleacher Co. talking about Apple. He's got a $345 price target for Apple's stock. That's over the next 12 months. The shares right now down about 5%. They're trading at $299.